Hi everyone. ATT UK's UAE VAT Diploma. We are on chapter 4, which addresses categories of supply. So this chapter looks at how to work out whether supply is subject to VAT, and if it is, how much VAT to charge on that supply according to VAT legislation as implemented in the UAE. Let's go directly to 4.2, which is category of supplies. Basically, the three categories in which transactions are split. One is the first one is taxable supplies, a supply that is subject to VAT. Then there is the exempt supply, a supply where VAT is not imposed and on which the related input tax cannot be recovered. That's the exempt supply. And then there are supplies which are outside the scope of VAT. You could call them as transactions also, which are outside the scope of VAT. Now, one by one, we will quickly address these. Now, the first category was taxable supplies. Article 3 of the VAT law states that the standard rate in the UAE is 5%. That's the standard rated supplies. But that's not the only rate. Another type of taxable supplies is where the rate is 0%. So additionally, and under Article 44 of the VAT law, certain supplies, as stated in Article 45, Article 44, 45, they are taxable supplies subject to zero rate, 0%. Okay. So we have, so if, in summary, we can say that taxable supplies are of two types. One, the standard rated supplies, which are taxed at the rate of 5%, and then zero rated supplies, which are taxed at the rate of 0%. Whilst there is a definition of taxable supplies in the VAT law and regulations, the legislation does not provide a list of standard rated taxable supplies. So, uh, nothing is as such provided that only these particular specific supplies, milk, sugar, this, that, will be zero rated or standard rated, etc. No such list as such is there. Supplies are standard rated by default if they are made by a taxable person and fall within the scope of VAT. If they are not covered by the provisions relating to zero rated or exempt supplies, then they will be standard rated. So it's a reverse ascertainment. Examples of standard rated supplies include food, clothing, machinery, every other thing that you can think of that by default it will be standard rated. Exceptions may be there for zero rated and exempt ones. So we will come to those exceptions. The zero rate means that VAT is charged but at 0%. Article 45 of the VAT law sets out a list of the suppliers that are zero rated. So let us have a look at it. Examples of zero rated supplies: export of goods and services to outside the implementing states. Now, key point for us to remember is this word outside the implementing states. We have discussed this concept of implementing states before. I'm going to repeat it for you. Implementing states are only those GCC countries which have implemented the VAT law. Now, out of the 6 countries of GCC, the other than UAE, 3 more countries have implemented VAT law, which are Saudi Arabia, Oman, and Bahrain. So 4 countries out of the total 6 countries have already implemented the VAT law. Qatar and Kuwait have still not implemented the VAT law. So if you're making supplying any goods or services to outside of the implementing states, then these will be zero rated. Now, why did the law say outside? Why not inside also? Because there are exceptions. If there may be certain buyers who will be VAT registered in those implementing states, so you will not rate those supplies as zero rated. You will have to charge standard rated. We'll see there are exceptions. Now, the first category was export outside implementing states. Second category, international transport services of goods and passengers. This is also one of the biggest categories of one of the biggest examples of zero rated supply. Certain precious investment metal, gold, silver, platinum, etc. Investment grade metals, basically. So these are also zero rated supplies. The first supply of residential buildings within 3 years of completion. So any development project, development of real estate development project that completes until after the completion until 3 years, if there is first supply, then that supply will be zero rated. That's a big support to real estate sector. And then what else? Basic and preventative healthcare services supplied to natural persons. Basic and preventative healthcare services to natural persons, again, it is zero rated. We need to remember that we're talking about essential services, basic and preventative, not cosmetic, or other uh, type of services. Certain educational services. Now, again, we will look at that also. According to Article 45 of the VAT law, the supply and import of crude oil and natural gas qualifies for zero rating. Note, however, that refined oil is standard rated and not zero rated. So there is crude oil and then there is refined oil. So supply and import of crude oil and natural gas, that is zero rated. But refined oil, it is not zero rated, it is standard rated. Further details on zero rating are found in Article 30 until 41 of the Executive Regulations for VAT. What about insurance? The FTA has issued a VAT guide on insurance, which is called VAT GIN1. Generally, insurance and related services are subject to VAT at the standard rate. There are limited exceptions allowing for the exemption and zero rating of certain insurance services. We'll see those two particular examples. Note that within these exceptions, life insurance and the reinsurance of life insurance is exempt. So if there is life insurance or even the reinsurance of that life insurance, that will enjoy VAT exemption. That's the first. Whereas insurance related to the international transportation of goods and people is zero rated. If you remember you know, international transportation related uh, good transportation of goods and services was anyway zero rated. So insurance also related to that international transport is zero rated. This is further explained in the guide with the two categories defined as follows. A life insurance contract is a contract lawfully entered into to the extent that it places a sum or sums of risk upon the contingency of the termination or continuance of human life, marriage, similar relationships permitted under applicable law, or the birth of a child, etc. So that's the definition of a life insurance contract. Okay. And then insurance relating to the international transportation of passengers or goods is a contract of insurance which is provided in connection with the international transportation of goods or passengers, including a transfer which begins or ends in the UAE. So, although we're talking about international transportation, but one point of either origination or culmination, meaning either the start or the end has to be in UAE. So if that is the case, then insurance coverage for such international transportation of goods or passengers, that will be considered zero rated. Now we come to the exempt supplies. So Article 46 of the VAT law outlines which supplies are exempt supplies. Further detail is found in Article 42 to 45 of the regulation. Uh, VAT is not imposed on exempt supplies. So naturally, I mean, these supplies, in case of these supplies, we don't charge VAT, but there's a bad news also. If we don't charge VAT, we cannot also recover or claim the input VAT that we had paid for these supplies as at the back end of the supply chain. We cannot claim the benefit of that input VAT. A person making only exempt supplies may not register for VAT and will not be able to recover VAT on their purchases. Examples of exempt supplies, certain financial services, like generally speaking, interest. So, lending and, even the certain anything that involves in interest usually, and as long as it is implicit, not explicit. The supply of residential buildings other than those that are zero rated. So naturally, up to 3 years, it is zero rated. Beyond that point, if you're supplying residential buildings, then it will become exempt. Bare land, supply of bare land, that is also exempt. Local transport of passengers, now that's a big one. In UAE, we have so many, taxi companies and all those, even airlines and all. So local transport of passengers is an example of an exempt supply. The conditions for zero rating and exempt supplies will be discussed in the next chapters. Since this is a very quick orientation, so that's why we are going through the high level things. These will be addressed in detail in the next chapters. Outside the scope of VAT, now certain transactions, as we discussed, are just they're not VATable. They're just outside the scope of VAT. They're not even exempt. So certain transactions fall outside the scope of VAT, including the following. For example, intra-group transactions. If there is a VAT group registration in force, we can form a tax group under the VAT law. We can usually it's called either a tax group or sometimes quickly we can refer to it as the VAT group also. So these supplies are disregarded for VAT purposes. If it's a VAT group already registered with FTA and two of the group companies are transacting, that transaction will be seen only as change of pocket, so no VAT implication will arise. The sale of vouchers at face value is not a supply. So there you go. If there is a sale of voucher, it's basically cash for cash, so no VAT implication arises. The sale of a business as a going concern is not a supply. So yeah, some taxable person sold the business as a going concern, and the other guy who's acquiring the business is going to continue either same or similar business, and he will stay a taxable person. It's a going concern transfer, but this will not attract VAT. It will be an out of scope transaction. Most compensation payments are not a supply of goods or services. There is a very detailed public clarification issued on that, VAT P001, disbursements versus reimbursement. Definitely, we are going to read that as well. But if there is a disbursement being made on behalf of a third party where the person did not have all the risks and reward related to a transaction, but that person was only doing a settlement on behalf of another person, related party, then that is a out of scope transaction. Most donations, grants, and scholarships are not considered a supply of goods or services. These are beneficial or voluntary nature, right? Kind of a charitable purpose. If a donation is given without any express or implicit benefit, it is not a consideration for a supply and is accordingly outside the scope of VAT. This is outlined in public clarification, donations, grants, and sponsorships. VAT P011 issued by the FTA. So the whole idea of the business element, the commercial element is not there. That's why it's out of scope. Passive interest income from bank deposits and dividends received from passive shareholding generally do not amount to consideration for a supply so fall outside the scope of VAT. This is outlined in the public clarification, bank interest and dividends. So a very interesting angle. So someone places their money in a bank account. So this is passive interest. So it is not something that the individual needs to file a return, because this is not business income. This is passive income. VAT P010 issued by the FTA. Neither passively earned interest income generated from bank deposits nor dividend income received by merely holding shares in a company constitutes consideration for a supply. Note that in the case of a bank and other institutions whose core business is the management of investments, this is not regarded as passively earned investment income. It's the job, it's the very core business of that investment bank or investment advisory firm to earn uh, return on their investments, or for that matter, earn dividends on the shares in which they have invested. But that will not be a passive income. That's an active income, and there will be VAT implications. Leaving a voluntary tip in a restaurant is not considered to be consideration for a supply made in the course of business, although compulsory service fees typically do fall within the scope of it. So it's a tip is a very casual, voluntary thing, and it is not mandatory. It's not. It's totally discretion of the customer. So this is also not seen as VATable. It is out of scope. Services provided by employees to their employer are not within the scope of VAT. Employees are providing services in a different capacity, in the employment capacity. So that's not an independent capacity, that's a dependent capacity. So that's why out of scope. The functions of a member of a board of directors performed by a natural person appointed as such for any government entity or private sector establishment are not considered a supply of services for VAT purposes. This extends to a non-resident natural person. So that is also, board services, board of directors services, that is also out of scope. Supplies which are treated as outside the UAE under the place of supply rules. We are going to read the place of supply rules in detail later. But if there is a supply which is outside of UAE, maybe a third port sales, picking the goods from China, sending to Africa, goods never enter UAE. This is one of the examples of supplies that have taken place outside of UAE, so they will be out of scope. Note, as mentioned in the previous chapter, the grant or transfer of ownership or disposal of government buildings, real estate assets, and other projects of a similar nature form from a government entity to another government entity will not be considered as a supply. We have already discussed that previously as well. So this is a repetition. If government related real estate and capital nature infrastructural projects, etc., so these will be considered as out of the scope of VAT. But there's a time limitation. So let me read this. Uh, as well as the grant or transfer of the rights to use, exploit, or utilize the government building, real estate, and other projects of similar nature from a government entity to another government entity, including any granted or transferred right of use, exploitation, or utilization as of 1 January 2023. So if such similar transactions have taken place before 1 January 2023, there will be VAT on they will be subject to VAT. But beyond 1 uh, 1 January 2023, that day included, uh, these transactions will be considered as out of scope of VAT. A government entity is defined as under Article 1 as ministry, government department, etc. Whether it is federal level or emirate level, these are all government entities. Now, compensation. Most compensation payments are out of the scope of VAT. The FTA has issued a public clarification which explains that typically compensation payments are treated as being a consideration for a supply of goods or services. However, there are certain exceptions, like, for example, a hotel cancellation charge, uh, a payment to enforce a contractual term where, for example, a dispute regarding a price of goods is settled by requiring a contractual recipient of the goods to make a payment for those goods, a payment in return for granting a right, right? So these are the exceptions. There are certain exceptions to the rule. These are the exceptions. Otherwise, compensation payments are out of the scope of VAT. Only in these cases, VAT may be applicable. Donations, grants, and scholarships. Now, we discussed this already. There is a voluntary, there's a non-commercial angle involved, so that is why these are out of scope. But where there is no directly identifiable benefit received in the return, donations, in return, donations, grants, and scholarship payments are outside the scope of VAT. There's a public clarification document that explains that where there is a directly identifiable benefit received in return for the payment, the VAT implication will arise naturally. For example, if a business donates money to a hospital with no benefit received in the return, this donation will be outside the scope of VAT. But if the business makes a payment to the hospital, and in return, the hospital provides space to the business to display and market the product. Now, there is a reciprocal arrangement. Now, that's something where the VAT implication will arise. Why? Because now the this business is not paying the hospital free of consideration. They are getting some advantage in return. The payment will be treated as consideration for the taxable supply of providing space for undertaking marketing activities and will, as such, attract VAT. So that was chapter 4, which identified the three categories of supplies, which is taxable supply, exempt supply, and out of scope. Soon we will, go through chapter 5 as well. Thank you very much.